Hi, my name is Akshat Pandya. I head real estate investments at Aditya Birla Sun Life AMC. Real estate is often seen as a risky asset class. Let's clear up some misconceptions and uncover the true potential of this multifaceted and evolving market. Real estate has long been a powerful wealth creator. Today, it's becoming more and more structured and accessible than ever. With rising urban demand and limited housing supply, the right investment structure can offer tangible and consistent returns, making it a smart choice for modern investors. Real estate is no longer just about buying property. Investors can now participate through professionally managed funds that offer access to institutional-grade opportunities. These vehicles are backed by strong governance and deliver predictable income streams without the hassle of direct ownership. There are multiple ways to invest depending on your risk appetite. If you're looking for low-risk options in REITs offer steady but modest returns. For those seeking better yields, structured credit and real estate debt funds like AIFs provide access to curated opportunities with higher return potential. And for long-term investors, private equity platforms offer diversified exposure. While property markets may fluctuate, debt-based investments are designed to deliver steady returns. Structured debt AIFs, for example, typically offer quarterly payouts and are built to withstand market cycles, making them ideal for investors seeking reliable returns. In a typical real estate project, around 15 to 20% of the capital comes from equity, with the remainder funded through debt and internal accruals. Yet, traditional financing often leaves a gap. That's where structured funds step in, providing smart capital to bridge this shortfall. They focus on addressing this funding gap, enabling projects to move forward while offering investors a reliable way to earn consistent returns from real estate without the need to own physical property.